Where were you on October 10th?
It was a very intense few hours.
What the fuck is happening, man?
There was a fundamental catalyst, and then obviously something somewhere had popped.
A lot of things were connected to each other.
Yeah, for sure.
And then quite quickly, the rumors about Wintermute came in.
Yeah.
Meet Jake Ostrovskis, head of OTC at Wintermute, one of the largest market makers in crypto. In this episode, we talk about the biggest crypto crash in history, what it revealed about market structure, and how market makers like Wintermute help stabilize liquidity across exchanges and OTC markets. Jake shares his insights on token listings, institutional flows, and the real mechanics behind crypto's most important trades and market makers.
Trying to pinpoint exactly where the pain point was that caused this is very difficult, if not impossible.
Ultimately, the market has expanded, so market makers become bigger too, and market makers are required to operate in the system, otherwise the system doesn't work.
For sure. Everyone thinks that market makers make money on every single trade.
No.
We're in a game of variance. It's more of an art than a science in that regard. I think there's always going to be an edge in crypto as a retail participant. But then on the other side.
Before we continue, I would like to ask you for a favor. New Era Finance is designed and started to educate you about the future of finance. And I think that blockchain and Web3 is going to rebuild everything that we know about finance. And that's through those guests and the in-depth conversations that we have. However, more than 80% of you are watching this without being subscribed. And if we get more subscribers and more views, and we can start building this community, we can get better guests, we can improve the content, and we can start building. And in that way, we can start educating you even more. So I would like to ask you for a simple favor to check whether you are subscribed. And if you're not, please do, so we can start and continue to build this channel towards a bigger channel to help you all. Thank you very much and enjoy the episode. Welcome to the show, Jake.
Thank you.
The first thing I have to ask, where were you on October 10th?
Unfortunately, was at home. So obviously, naturally, I mean, how our trading desk is set up is that London would cover ultimately until Singapore come online. And it was in the window between obviously London passing over to Singapore. And therefore, obviously, you can't be leaving people with a book that isn't neat and tidy. So it was all sort of hands on deck, people coming back online. But yeah, it was obviously then late on Friday night, early into Saturday morning. But yeah, I mean, everyone sort of says like, where were you? Like it was this big event, which no doubt it was. But I mean, there was maybe 30 minutes of chaos market wide, and then it did settle down quite quickly, which I guess probably is kudos to maybe the market structure has evolved a lot. If this had happened maybe 3 or 4 years ago, I think it would have been an entirely different story. And as we've seen in the past, I mean, things have happened, and I guess skeletons have come up to the bodies have floated up a lot quicker. But yeah, I think overall, like it was a very intense few hours, very active. Obviously, quoting prices through the whole the first start of it, and
especially
when volatility spikes. Yeah. I mean, a lot of alts, it became very difficult to price things for that period, because obviously when we're quoting OTC, we are leaning quite heavily on where all of the volume or most of the volume is being done to come to our fair value price as a market maker. And when you've got even like Arve is trading maybe 10%, 15% off on X exchange versus Y, you then have to really be thinking about, okay, well, what is the fair value price here? Because you can make some judgments about, okay, the price is off, but there's nothing in the book. So therefore, that's probably the fair price. And I guess obviously experience helps a little bit in those situations, and obviously blessed enough to have experience with other asset classes as well. So you sort of know how things trade in crisis, but settled down relatively quickly to the point where everyone was fairly comfortable again with positions, risks. And yeah, I guess it was good to see things in action, basically.
Well, I mean, as I said prior to this conversation, we run our own liquid fund, high frequency trading, basically volatility. And I woke up in my holiday days in Lombok and 6 hours ahead. So I got some calls from friends, and I was usually when they call, the last time that they did was the COVID crash.
Right.
So I knew that if they called during midnight or during my sleep, it's going to be really bad. And I looked into TradingView and I saw some minus 60%, minus 45%. I was like, what the fuck is happening, man? So I logged into the account and I was like, okay, I don't know what has happened, but something broke down.
Yeah.
And it had nothing to do with anything fundamentally.
Yeah.
And it's just basically a flawed system in Binance or anything that cracked down there. And then quite quickly, the rumors about Wintermute came in.
Yeah.
That Wintermute crashed down or that they went bankrupt but that none of it is true, as you basically take no position. But during that period, the risks are going up, the spreads are going up.
Yeah, for sure.
How did Wintermute handle the entire few hours of peak mania?
I guess it just comes down to all hands on deck. Like 24/7, we have this ultimately living, breathing organism, which is the trading system, right?
Mm-hmm.
And each day you take positions, you hedge them out, you take positions, you get market neutral as the market passes you positions. The difference when it gets super volatile is that you're landed with lots of positions all at once.
Yeah.
And as we obviously now know, like there was a lot of sort of ADLs that were happening on exchanges, which then for a period of time may have blown out some people elsewhere. I mean, I think it's fairly public knowledge that there was a small percentage of our book that I guess that side of the trade did come undone. So, but you then just have to get delta neutral quite quickly. A lot of it's algorithmic anyway. So the main human involvement is always checking risks. And the largest issue that we really had, like we maintained fairly solid uptime through the whole of it, which again, like we all look back and we're like, that was quite impressive that we were able to do that and the systems held. The issue we had was moving inventory between exchanges and where we needed it. So like maybe something was trading really far out, but it was trading far out because people couldn't get inventory onto XYZ place. And that was really like the main headache, getting inventory to the right place in order to put things back in line. And that is obviously something completely outside of your control because you're leaning on block times, you're leaning on exchange deposits and all of these things that are obviously fairly fragile when everyone is one way trying to do the same thing. But yeah, ultimately it sort of settled down quite quickly. We were quoting all night. It was great to be able to, there's a lot of counterparties that had come in for like big OTC trades who there's a lot of other desks that seem to have been down over that period and ended up coming back to us. Maybe there were historic relationships which had been trading away elsewhere. And so that element really helped us on like a service level. But yeah, I mean, by like all accounts, as you said, like I woke up to messages from friends who never touched crypto saying, "Are you okay?" I saw what happened. I was like, "What do you mean? What happened?" Like, like is in crypto, it's like when you've been through a few of these events, which it was a market event, as you said, it wasn't driven fundamentally. There was a fundamental catalyst, and then obviously something somewhere had popped.
A lot of things were connected to each other.
Yeah, for sure.
I think. Well, the first initial emotional reaction I had was my account is liquidated because I used to trade perps a lot.
Right.
And I remember that during the FTX crash, I was also spending my holidays in Oman.
Right.
And my entire account blew up during that crash. And Luna was the same, was also during holidays. So maybe I just shouldn't be taking holidays at all. But all the friends were texting me like, are you okay? Did you survive? And actually, a lot of funds have collapsed, or like market neutral, delta neutral accounts that have been shorting perps, long spot, or the other way around, were crushed through the system that was applied during those hours, which you referenced as ADL.
Yeah.
Would you be able to explain that to the listeners, what ADL actually is? Because nobody knew about the entire thing before.
Yeah.
Friday the 10th, I guess.
Yeah, I mean, it's a way for exchanges ultimately to protect themselves from going bankrupt, and obviously technically users as well. That's what it's in place for. it allows them to obviously take positions out that they would deem don't have the other side of the trade. So obviously the issue in this case was that people were short and they were blown out of a short leg and then left naked long. So they were taken out of a profitable position. For every short, there's obviously a long. And if those orders don't match up at some point, that is when obviously these ADLs tend to happen. And different exchanges have different methods of calculating how it's done. I think a large thing that added to the microstructure component here is the advent and the growth in, I guess, the perp dex farming, because there's a lot of capital there, and those were very, very clearly leveraged on both sides of the trade. So maybe they were leveraged long on one side and they were leveraged short on another side. And that meant that there were probably some blowout on both legs, which is ultimately, that's where the capital has disintegrated ultimately, and that's what added to the forced liquidations. Trying to pinpoint exactly where the pain point was that caused this is very difficult, if not impossible. It's a lot of people are looking through the scraps and trying to find like where it actually started, but I think it's so difficult with current microstructure because you never know the intention of someone on one side of a trade. You never know if it's one part of a hedge. You never know if they've got, I don't know, a long delta somewhere, or it's a complete directional trade. But as you said, like logically, you would have thought that some of the long short funds probably had a very difficult evening, especially if they're using a lot of leverage on the perp legs.
Yeah.
That said, I've actually been surprised in the chatting, not just to our counterparty base, but also like other desks. I mean, we're obviously chat to other desks as well, and generally everyone seems to have survived pretty well, and there's no one yet that seems to be like, okay, I think there's a bit of pain in this corner. So in terms of like systemic impact at the moment, and I hope I won't be made to eat my words, but it doesn't feel like there was a huge blow up or huge enough to be this sort of bleed out like we had in the last cycle, where you saw a few of obviously like 3 hours, but then obviously that was looped with a lot of leverage from the lending desks as well, which hasn't existed ultimately this cycle.
And a lot of contagion because they were borrowing funds from another one.
Precisely.
And actually we're doing it again internally to another entity. So to be honest, the ones that have actually been hurt through this entire crash are retail traders that are naked long in perps or are shorting and longing in different occasions, and then both of them get squashed out. Or funds that are having a very basic market neutral strategy or funding or whatever they do. Those have also been blown up. Especially in the Netherlands, in the rumors, some funds have had some serious issues, but not really a big one.
Exactly.
That's it's interesting though, because it's 20 billion. They say so. You should expect that the big one has been blown up.
I think it's the numbers, I guess, would have to be taken with a slight pinch of salt, because if it's 20 billion, even if they're running that leverage on like a 50% ratio, you halve it already. So I don't know. It seems to have been like a lot of the big positions that were blown out, and how those mechanisms tend to work is they will look algorithmically at the most highly leveraged positions first, and therefore as a proxy, that actual headline number is great for the press and the media, but actually on the underlying, it's not going to be as big as that. Not saying there wasn't huge pain. There was obviously very big pain, and you just need to look at the charts to see that. But the headline number and the actual reality, I think, are probably two different things. And also, I mean, we've seen this like throughout this cycle when people have been quite, I guess, overt and about talking about how exchanges are, I guess, putting out and sharing their liquidation data. Like you had sort of a few of the, I guess, large CEOs come out and say, okay, we weren't like putting this out and reporting it properly. Now we are. You've then got like CoinGlass, who are like taking different elements of liquidation data and saying this is right, this is wrong. And then, I mean, there's the microstructure there for a centralized reporting system obviously doesn't exist as a function of the market being fragmented. So yeah, I think it's very hard to sort of piecemeal your way through the wreck.
That's actually true, but ultimately, if you went onto social media the days after, it was very clear that retail altcoin long traders were completely vanished away.
Yeah.
Then I actually got a quote here, which is from Evgeny.
Right.
I was listening to a podcast to prepare for this show, and he said, "I'm generally very sad that people are stupid and post all sorts of things." This is more or less on the comments on Wintermute.
Right.
"But these are the people that gamble on altcoins, and as long as they keep going to the casino, we make money out of it. So I'm fine with it." The thing is, I've been listening to Evgeny like 3 or 4 podcasts right now, and I'm just generally interested. How is it to work for him in Wintermute? Is he like that direct as well towards the team, or how is it to be with him?
Yeah, I mean, it's
such a funny troll, to be fair.
Yeah, I mean, he's brilliant online. I think people love to sort of, as you mentioned, obviously look through the comments, but I think a lot of what he says is very true. It's not like a lot of fluff. It's very direct. It's to the point. It's exactly sort of what you probably need from ultimately a leader. Mm-hmm. And when you do see that being put across in a public forum, it's like, okay, well, like that's probably how everyone feels across the market, and it is the reality of it. And it's not hiding it like a lot of other people, I think, like to do. But ultimately, I mean, that quote directly, I mean, we gain nothing from people leaving the market. We gain from being in the center of the market as it's growing and expanding. Yeah. So from our perspective, that is exactly sort of, people need to continue trading. And for that, we can only hope that people are able to come back and obviously participate, because it's a new sort of system that's being generated. And I think that's sort of core to our belief anyway. Just the beta over the next 5 years of being involved in the market is significant, and I don't think anyone wants to see it like collapse, right? That's why we're all in crypto digital assets in the first place.
Actually, that's true, and I think he's been very straightforward with his answers on a lot of difficult topics. Yeah, and he's applying a lot of game theory when it comes to like situations or trade-offs that are happening in the markets. Like if we're going to talk about it too, but like token valuations in general, there's a lot of negativity surrounding listings that are taking place, and then Wintermute get blamed for the fact that the token goes down. Yeah. But then his answer is, maybe the value of the token is just way too high. Yeah. Because ultimately, a market maker doesn't have a position. Yeah. Maybe barely, but just market neutral in general. Yeah. And if there is like a certain flow taking place. So like, for instance, if a retail trader is selling 5 million of Bitcoin on one exchange, there's a spread between 2 exchanges, and that's where you take the spread. That's what a market maker does, right? Yeah. So there's no point or no added value of kicking out people out of the system. Yeah, for sure. For Wintermute, right? No,
it would be completely against our interest to do that, right?
There's no long-term game out of it. So going into like from this big event that took place, what do you think is required to make it more sustainable for like those type of participants in the markets, like the retail trader that wants to come in, gets kicked out again, altcoins are suffering again? What do we need in terms of safety to prevent this?
I think obviously the large issue almost, or consideration that comes up every single time one of these big liquidation moves happens, is the levels of increased leverage in the system building up to it. And in any market, anywhere in the world, like large increases in leverage are almost completely correlated with subsequent blow-ups in some way, shape or form. And yes, we're in a new market. We're in this growing world of digital assets where things are being reinvented somewhat, but the core first principles do remain. If people use a lot of leverage, at some point, like this is how things end in the short term. Mm-hmm. So I think that component is very difficult. What the solution is, I don't know, because if centralized exchanges cap leverage, it would push people onto DEXs and it would still continue.
Fair enough, yeah.
It's more of like moving from this model where people are just seeing this as speculative assets to let's trade this more like an equity where you have an underlying cash flow and you have a reason to believe in something, and therefore you can sit in something for a longer period of time because you believe it's going to go up and you're not trying to guess the next 100 basis point move in something intraday. That's where ultimately this churn happens. But then on the other side, like yourself, like if you're investing in things because you believe in things, and those long-term holders, that is the people who will sit in spot or use a little bit of leverage. Leverage is great in the right scenarios. It's bad when you get everyone piling into something. You see it in the funding rates, right? Like every time Bitcoin has made a new high, you look at hyperliquid, which I think now is probably a bit of a better proxy for the actual leverage in the system, because there's a lot of other projects that are obviously running these huge basis trades on I guess your traditional sexes and even the CME, which is compressing that. It's no longer a great signal. But then if you look at that on decentralized exchanges, it's not the same. So you can see where the leverage is getting quite large. And that sort of makes you think, okay, that's actually the pocket where it's happening at the moment, which is why I go back to that microstructure point, in that it is being really interesting to see like how traders have moved and leaned towards these DEXs. Obviously, a lot of them, and there is some capital there that won't be sticky. They might be just looking to farm an airdrop. But ultimately, I think when people interact with those and like learn about them, then ultimately that is probably flows down from there. And if people stay on those venues, that's going to be something to watch. But
good one. I think if we look at safety measures in general, I think one of the most common topics right now is circuit breakers, which is very difficult if you have so many houses to trade on.
Yeah.
The other one is, your background is also outside of crypto.
Yeah.
I think you've been trading oil.
So I was in a global macro seat before. So I traded everything from like oil to like lean hogs to like obviously then single name equities to FX. So yeah, everything under the sun ultimately.
But that's a different market.
Yeah, very different market.
And if you want to trade, probably a lot of those commodities with equities, with leverage, it's not as easy as with crypto.
Yeah.
So from safety measures, you would argue that lowering the leverage on all the exchanges is probably the safest way going forward.
Yeah.
Because retail traders have the impression to go more risk on by adding leverage, while leverage is actually mostly being used to decrease risk.
Yes, for sure. Yeah.
That's how you should be doing it, right?
Yeah. I mean, well, that's like if you think about the use in crypto of even something like options, right? Like options at their very core in any other market are insurance products. That's what they are.
Yeah.
Not in crypto. They have been traditionally used to add leverage. And that has been, to be fair, that is changing, and we're seeing a lot of that flow changing. You can see it in like the nature of like the volatility surface. But historically, that wasn't the case. And that's just because everyone is just looking to add leverage when they think the market is hot. Yeah. And that comes again like to perps. Like traditionally, people would use futures to hedge risk.
That's how it used to be. Yeah.
Oh, that's how it used to be. But now, obviously, these amazing products called perpetuals, which at the very nature are fantastic, great product market fit. The Nasdaq is now looking at them like they're probably going to become the gold standard in leveraged futures markets all around the world at some point. I do believe that because they have huge advantages. The disadvantage, obviously, as you said, for longevity and the short term is that at the moment there is no cap on leverage. But being realistic, as you said as well, like because there's so many different exchanges, if one exchange capped people at 10, another one would use that as an advertising model to bring them over. So in a realistic world, I don't know if that is the answer. Circuit breakers, yes. I do think that would be in an ideal world. But again, the level of fragmentation and who's going to police that, because there has to be someone to police that if that's market wide. Like that doesn't, at the moment, doesn't work. That is a problem that I'm sure at some point someone will try and solve. But when you have so many different DEXs on so many different chains, and then you have so many centralized exchanges, you're going to, at some point, to even consider putting that model in place, you would need someone overseeing that whole market structure. And then I guess you get into arguments, who's the best place to do that, which I guess at the moment, I wouldn't even know where to start with that argument.
No, that's like, it's so difficult. I mean, even from that example, but there's a different example. I'm from Netherlands.
Yeah.
We have Michaël, which basically excluded me from trading on Binance for already like 4 or 5 years. And then one exchange after another left the country. And then you're basically left over with Maxi and a few of those like tier whatever exchanges.
Yeah.
And you're not able to trade futures. So what do? You go onto Hyperliquid or onto Aster or any of the other ones and trade futures there. And then you can create a regulation, but it doesn't have any impact at all if you have a DEX.
It doesn't move the needle.
So then it brings me back to how are you going to create an efficient market?
Yeah.
If people want to trade with that leverage, well, let them, but that ultimately also ends up with people being kicked out. And then we are going to keep having these sort of events.
Yeah.
It's just a big sort of trade-off, like one way or the other, it's not going to be fully practiced in an efficient way, right?
I guess like the flip side to that is that considering where the market is now compared to 5 years ago, right?
Yeah.
We are trending in the right direction. These things never go in a straight line. Like we were going somewhere, FTX happened, that big blow up, you saw all of the contagion, that set us back a couple of years. Then we've gone up again, and now arguably we've had this big liquidation event. We don't really know what comes out the other side of it. You know, there's a lot of pain somewhere. You can sort of pinpoint where the rough problems have stemmed from, i.e. leverage, but it's very difficult to find an exact actor in that space. But like any market development, like think 2008, no one really knew about CDOs beforehand, right? No one knew about like this rehypothecation of mortgage-backed securities. After that blew up, the regulation happened, people realized, okay, let's do that so it's not going to happen again. And markets, again, like they are going very back to first principles again, like people do learn from their mistakes. And this is something that people now will look at and say, okay, well, that's, as you said, like people learned about ADLs. Now, everyone, I think, really trading this actively is very aware of what that is and what the impact could be. Before last week, very few people in the market probably were. And that has changed in itself. So then you say, okay, well, the next big dump is probably not going to be caused by that because something else, and it'll be something else. Like markets don't tend to crash or have a big negative event when something is expected or very well known about, because people can arguably always model something in their head of the risks there. Mm-hmm. And it's always the thing, it's the devil you don't know that ultimately ends up being the big impact. So
funny enough, I started reading the book The Black Swan during my holidays.
Taleb.
Yeah. It's not about like those big events, but it's in the context of everything.
Yeah.
Like how much do we know that we don't know?
Yeah, exactly.
That's essentially like basically everything is a black swan.
Yeah.
That's what his conclusion is. It's fascinating to read.
It is, yeah.
And then it's also like, how are you going to optimize for the outlier, or are you going to optimize for just everything? And then there's that one tiny bit that if that happens, it happens and it's out of your control.
Yeah.
And that feels like we can spend a lot of time making this better, but this was just a chain reaction of events taking place in such a short window of time that we couldn't prevent.
Yeah.
I kind of feel like that was it, to be honest. Trump saying something, fine.
Yeah.
Then the Binance 3 pairs that basically broke down because they were going to be priced different in a few days. Coincidence.
Yeah.
And then, market makers being full with their inventory on Binance, not being able to deposit.
Yeah.
That caused the entire reaction on the market, right? So how was it for you to run the OTC during those hours?
Yeah.
I mean, it should be very difficult.
It should be very difficult. Yeah. I mean, again, like a lot of it comes down to like if the pricing holds up and you can trust your price as your mid price, it's fine. As soon as you lose faith in the ability to trust a mid price, then you can't show a bid and offer that you'd stand behind. And when things were off on different exchanges and people were trying to come together and think, okay, what's right, what's wrong, what are you taking out the pricing, etc. All of that is a process. A lot of that happens very quickly as well, right? A lot of it was looking at, okay, even down to like pricing at that point, someone looking to do like a big USDT trade. USDT on different exchanges was trading all over the place. So even that, as a very simple, like vanilla example, it then becomes, okay, you can't just trust your mid price. You've got to look at what, you've actually got to be super aware of what is going on around, like why is that over there, and really why it was over, because everyone was buying it and because they were getting liquidated and or selling down anything that they did have, and they were bidding up USDT, for example. But that was happening on one exchange and it wasn't another. So then that feeds into your estimation of where price should be, and then that allows you to keep the show on the road ultimately. But yeah, it very much was like we were very cognizant of all of our competitors. Again, going back to like the game theory, right? Like everyone is in the same position, and it then becomes almost like, let's keep running, let's keep showing pricing, let's make sure everything is back in line as soon as possible. We want to be the first people and we want to have the highest uptime. And genuinely, I think we did a very good job at it. And so yeah, then after the first half an hour, it's sort of, okay, you've obviously got to quote wider because by proxy of the ranges, and because we're a prop desk as well, any trade that we take with a counterparty becomes our risk at that point, and we have to be happy that we can hedge out and obviously still take a spread. So there's a lot of different things that we had to think about, but yeah, ultimately another day at the office, I think.
Was it were those hours like peak mania in terms of the OTC trading themselves too, or was there like a lot of panic taking place from big buyers and sellers executing trades on the markets, or?
Not particularly. I mean, I guess our OTC franchise is heavily dominated by spot trading. Okay. So as a function of that, we actually saw more people coming in and trying to buy the dips, because it was very like, yes, there was a catalyst clearly that Trump had threatened tariffs again, but I think this TACO thing does reign true, and we've seen it be walked back since. So I think everyone quite quickly understood that it was a huge reaction and probably not relative to the initial news. So we did see people coming in and trying to buy the dip. Obviously, you had to be wide because things were blipping down 60% and then coming back up, and you're like, okay, well, gonna have to be wider here. But then people were coming in and sort of realized that nothing really was trading on the wicks. Like if you actually look at what did trade, a lot of it was just forced. There was no humans really there. But then as soon as it like came back and to the point where we were showing reasonably good pricing, and of course, like when it's going on, you're showing really wide. As things come back in, and then naturally people aren't going to trade when it's super wide. So then on the OTC guys, we're then like, okay, we'll keep an eye on it. When we can tighten spreads, pinging them like, yeah, okay, I can tighten up here. I'm happy. I'm happier with our pricing here than I was 5 minutes ago. And then you, get it over the line. But it's just more about like toing and froing with counterparties, trying to get price that they're happy to trade on, price that we're happy to take a risk. And it's much more relationship driven than like, And that's why I guess you still have human traders on the other side of the book, right? Because that side of it really does help when the markets turn like that.
For context, I mean, the OTC trading firm or the OTC trading part is very clear for me. But on a regular day, what type of trading do you do? Who are your counterparties?
Yeah.
What is just a business day?
So on the OTC side, I mean, we've got about 2,500 counterparties globally. And that's predominantly on the spot side. We have another book that trades derivatives, which I guess we'll touch on after. But like on the spot side, we have everyone from, I guess, large holders. Maybe it's a venture firm. Maybe it's a liquid fund. Maybe it's a early investor. Someone put money into an ICO. So we have that side of the market. And then on the other side, we have like everyone from sort of traditional hedge funds, then crypto-specific, crypto-native hedge funds. Right down to sort of corporate levels. So now obviously we're seeing the corporate market becoming a really large part of intraday flow. So we're seeing a lot of that. We also have routes into a lot of the wholesale brokers and counterparties. So we're doing a lot of that flow that comes from agency desks. So the book is by proxy, offsets itself fairly naturally, which is great from our pricing perspective because it means we can be very tight. It means we can spend a lot of time instead of focusing on pricing, focusing on our like relationship side of things, i.e. sharing what we're seeing in the market, talking with higher touch counterparties, like just ultimately helping them understand what's going on any given day. And then on the other side, there's obviously the derivatives that we trade out of Asia, which then that looks a little bit different. That is predominantly like covered call overwriting on a project treasury, helping them to monetize without selling down, for example. And then we'll have like, okay, again, like someone might have like an axe on the curve and they want to express that. So maybe there's that side of the market as well. So we see a huge range basically. A normal day is like on a normal day, it would be you're trading, you're chatting to counterparties, you're providing color. You're ultimately just sharing what you're seeing and trying to sort of help them make the best decision they can in the time. Obviously, it's more of an art than a science in that regard. But yeah, I think we do a pretty good job of it overall.
So essentially, if we use an example for this, recently Tom Lee has been a big buyer of ETH.
Yeah.
He keeps on buying, which for me as an ETH holder is great. But he's doing it and he's buying like 250 million in ETH.
Yeah.
So hypothetically, he calls up Wintermute and says, hey, I would like to buy 50 million of ETH. And then within a few seconds, he gets a quote.
Yeah.
And then that's executed. That's basically what the OTC firm is
doing.
doing.
I guess to run you through the sort of specific flow of an OTC trade, right? So someone comes in for a big block of XYZ. I know where the mid price is based on our internal pricing models. That's where we feel like the fair price is. It's the trader's job to then decide, okay, if my offer's here, so I'm willing to sell it to them above the market, the mid price is here. That is my theoretical spread. Yeah. I then, as a trader, it's my job to do the trade, book the trade, and then buy it back. And if I can do that without minimal market impact, the spread is the spread.
Mm-hmm.
Obviously, look, like everyone thinks that market makers make money on every single trade. No. We're in a game of variance. So like naturally you get some times where you're short here because you've sold it to someone, you have to buy it back to deliver it, and the market ends up there and you actually take a loss on the trade. It's a game of variance. But we're trying to take tiny little spreads out of every trade rather than looking to, I guess, take directional bets on the market ultimately. Mm. And our main concern, if someone trades a big block with us, is how can we get out of our risk as quickly as possible. And actually, again, like contrary to popular belief, an OTC desk that operates in principle in that manner, like I've described, instead of an agency desk, which will obviously just try and spread the risk and get out quickly, the incentives are aligned in the way, because if you are buying something off me, I'm trying not to push the market against myself. So it's like in our interest to be very, very slow getting out of it, but fast enough to be getting the risk off the table and get our book back to flat. So that's basically what we spend most of the day thinking about and doing.
It's interesting because, of course, if you do an OTC trade in anything outside of the top 50, the spreads are going to be way bigger as there is less volume, less liquidity available to hedge the position, or the other way around. And I'm going to share a website where if people are interested in becoming a market maker, there are some websites with games that you can just play around and toy around. It's funny. And it gives you kind of insight in how a market maker works. That it's not, there is indeed the impression, and that's because I think market makers became so big so fast that market makers are the ones to be making a ton of money. But that's just not true. Because yes, the amount of opportunities for market makers have grown. And that's where the expansion came in. Like exchanges have been growing big time. Of course, we have seen some stuff happening between exchanges and projects lately, but ultimately the market has expanded, so market makers become bigger too, and market makers are required to operate in the system, otherwise the system doesn't work.
For sure.
In some way, if you talk about it. If we see the OTC trading then, how has that changed since Trump came in and the entire ETF and DATS treasury companies were
Yeah.
applied. I mean, you mentioned that you're going to open an office in New York, or that's open already?
So there's no trading in New York. It's predominantly sort of BD team is out there. It was a very recent sort of move into the US market. Obviously, historically, it's been a very difficult place to be in from a regulatory standpoint. So it had been previously just decided that it wasn't an area we wanted to be aggressive in at all, or even like operate in any capacity. Whereas now, obviously, there's a good opportunity there to grow the business. I think we probably feel like in the European market, a lot of people sort of do know who we are, especially crypto native. I think like over the last, since Trump really got in, the main thing that we've seen that's been slightly different is that the type of counterparty. So obviously you're always going to have this really solid crypto native group of people who will continue to trade the assets as the market grows. But we're now seeing a completely different subset of counterparties that want to trade this stuff and they need access. And that is really where we're focusing on, I think, in terms of a lot of traditional counterparties at the moment, they don't know, they're not going to be as familiar with the brand Wintermute than crypto native. So that's been a large focus. And that's come down to, on the OTC desk specifically, what that looks like is more of this sort of white glovey, high touch execution where we're talking people through the market microstructure, explaining how things work, why we're doing certain things, providing additional color about like liquidity profiles throughout the day, for example. Like as you mentioned, we've got different flows now that hit through the day, and arguably a lot of the time, most of the time, in fact, they're unnamed because they're coming through a wholesale counterparty somewhere else. But you can sort of see the liquidity profile through the day, and yeah, it massively impacts spreads in a relatively illiquid asset when you compare it to like the SPY or something, right? Even if you look at Bitcoin versus SPY, there's a huge difference in the liquidity profile.
Yeah.
And since the advent of the ETFs and arguably the growth of the US market, like liquidity is now changing into the middle of the day, and it's like the real belly of the New York session. Whereas before, in like last cycle, a huge amount of that was being seen overnight in European time, so like in APAC. But there's different times where it shifts and changes, and I guess it's our job and really where we're finding the ability to share that with these high touch counterparties, that they are finding a lot more use there in that sort of, okay, this is what's going on. And that's how we're sort of picking up business.
I spent the time in Lombok, and during the day or the first hours of the day, basically the ticks were just like going sideways. And then Europe woke up and it started to move a little bit. And then US came in and it was like all over the place. And back in 2017, it was actually Asia moving the markets. And in 2021, it was more or less Europe. And now it's becoming US, as that's by far the biggest market anyways. When we look ahead of the current market, I mean, before this all happened, I think Wintermute posted something, or Evgeny, I don't know, that you were out of stock of ETH, which is positive again. But how's the current situation on that front? I think a lot better.
Yeah, no, I mean, it's somewhat like we laugh every time those posts come out because it does show where you are in the short-term cycle, especially. And that was obviously when a lot of the DATs were buying up ETH. And I mean, yeah, again, going back to that example of like how we actually operate. Yes, we have inventory of Bitcoin, Ethereum on our balance sheet anyway that's hedged accordingly. When someone comes into a really large trade, I mean, we would sell that ETH, but we also need to buy it back. So we are also a participant in this market as well. So it's technically, unless ETH, I don't know, disintegrates and ceases to exist, it's physically impossible for us to never be able to not be able to sort of deliver ETH. Basically, we just have to buy it back on the market like everyone else.
It's not negative for any holder of the underlying token.
Yeah, exactly. I mean, the difference in how we buy it versus how someone else, like if they're going and clicking it on the exchange, we're trading on every single available venue and we're doing it algorithmically. So that is the difference in that, like, our technology has been core to our edge as a trading firm. And for that very reason, that we can hit every single venue possible in order to just stay on the offer and not completely wipe the book and push the market against us. And I think that's the main difference. But yeah, we'd never run out of Ethereum.
Well, A question that I wanted to ask you is, if you are a retail altcoin investor after this lengthy bear market that we've seen, and now we see this big crash taking place and we blame everyone except ourselves, what is in it for an altcoin investor or a retail investor that doesn't have the inside information that a lot of big parties do have? Like, for instance, VC investors know when other VC investors are going to do something with a certain project. Exchanges have certain info. Market makers have contracts. It feels like there's no real opportunity anymore.
Yeah.
What would you say to any investor at this point in the market?
I think there's always going to be an edge in crypto as a retail participant, especially when you compare it to like an equity market, for example, or even as a retail participant versus a larger counterparty. And those edges could even be you are way more nimble and you're able to move size in and out of the market. Mm-hmm. That in itself is hugely underappreciated. A lot of the stuff that goes on at the lower end of the market, where obviously a lot of people seem to make a lot of money, whether it's lottery tickets, that's outside of my remit, but like, that seems to be an edge that is still completely available and dominated by retail. And like, I wouldn't be able to tell you much about that market because it's for us, it's difficult to even spend time thinking about it because it won't help us move the needle. And it's not something that we're trading with counterparties. But I mean, I've got friends who have made a very good amount of money in that section of the market. And sometimes I think, I'm jealous. Like, do you know what I mean?
Tell me about that.
So like, there is still the opportunity there. I think even like my view is there's two. If you really believe in crypto in general, and I do think people could do very, very well just being long the beta of this market for the next 5 or 10 years. That in itself, I think, is probably an edge in that. Okay, it's almost like a risk premium if you believe more than the rest of the market at that period in time. Mm-hmm. Some people will have seen that move and been filled at a very good price because they just had an order in. That's an edge. You can do that as a retail participant. But yeah, I think like a lot of people seem to overtrade a lot, and that naturally is never going to be good. Like, I mean, this is obviously a well-known fact. Probably like if you're buying and hold, like even in the S&P, if you bought and held the S&P, like a lot of active hedge funds even underperform that benchmark. So
fair enough.
I think if you believe strongly in the market and you're willing to stand by whatever you pick for the next 5 years, that in itself is probably an edge if you sit on the hands and ride it. Obviously, again, back to Evgeny's comment, that's obviously it wouldn't help us. So maybe that pushes people further towards it, but that's ultimately how people do. Yeah. And it's seeing it as a bit of a marathon, not a sprint, I think.
It's also, for instance, gold has been going absolutely vertical the past 3 years. I think in terms of events, it has been the most volatile move up, even heavier than 1979 in terms of volatility, I guess.
Yeah.
But if you have been DCAing into gold for the past 30 years, you would have had a tremendous return.
Yeah.
If you did it with the S&P, the hurdle rate would have been 8% or whatever.
Yeah.
If you do it with Bitcoin, it's like 50% per year.
Yeah.
So simply buying and stacking sats is just the best strategy going forward. And then you don't need to go on the risk curve to risk it all.
Yeah.
Because at the end of the day, if you stay in the game, that's what you need to do. And then Wintermute has had some tests as well. FTX has been a pretty big chunk of the entire inventory for Wintermute and any other market maker. And as long as you do that and the market keeps expanding, then you'll be fine, I guess.
Yeah, I mean, it's about surviving. Like ultimately, we want to see the market do well because the market does well, will do well as a function of the fact that more people will be trading. There's more volume going through, and naturally we need volume we live and breathe on trading volume, right? Mm-hmm. At the end of the day. And so for us to see the market grow over the next 5, 10, 15, 20 years, that is the best thing we can do. And it's definitely, as you said, like we're playing a long game, which again has seen us through multiple different sort of cycles in the market, and we've come out on top and like built the brand. And I guess the wins do start compounding to the point where I do feel like we're in a fantastic position. And I mean, it's like the best thing for everyone that works here is that the whole market grows together. And I do think, short-termism, I think, is probably the killer of anyone looking to get rich quick.
That's actually true. Where do you see the biggest expansion taking place in the next few years for Wintermute or the OTC desk?
Yeah, I think like there's definitely a corporate market that's opened up fairly aggressively. That is naturally almost akin to like the growth in like FX brokers, right? Like they rode a wave where corporates started to look at non-bank providers, and I think that's probably going to continue to happen there.
Mm-hmm.
That is naturally going to be a large portion of the token supply will end up sitting in those corporate balance sheets. Then obviously you have the other question of when do sovereigns start properly getting involved on a large scale, but I think that's probably, again, a bit longer term. The function of those corporates then having a large balance sheet of assets, some may be productive, i.e. obviously ETH is a productive asset, some might not be, i.e. Bitcoin. I think there'll be a big opportunity there in terms of how you help those kind of counterparties who don't intend to sell and are not technically leveraged if they're not using large sort of debt packages. In terms of how to make that productive, and I think that is an area we are starting to see a lot of interest in. Okay. Again, like on the spot side, the more people who are coming in from the market, you're going to get like these big name tech firms at some point who start really becoming very active, and that in itself opens up a whole new world. And I think regionally, obviously the US is very interesting to get involved in, and the tokenization of other assets as well that are going to come on the blockchain. That in itself is another huge trend that I think we're going to see really take off, and that's down to like any sort of tokenized asset that's currently traded on I don't know, NASDAQ. They're likely to have a counterpart probably on the blockchain. So all of this stuff like is longer term planning, but yeah, I mean, I think there's probably going to be a lot of demand led from those different avenues.
I mean, yes, and I think that we're just still at the very early stages of everything that's been happening or is going to happen in the space. And even governments, but also even the bigger protocols that have treasuries, that have tokens, that want to make it work to get a yield out of it. It's just treasury management. That is also part of the work that a market maker is doing. We need to round it off. I can talk for hours about trading and OTC and all those things, but probably you'll be on the show at some point again. Where can we find you on the internet or anything related to Wintermute? Well, I would strongly advise people to follow Evgeny too, but
yeah, for sure. That should be the first port of call.
Yeah, that's the one.
But
where can we find you further?
I mean, my Twitter handle is jo_Wintermute, so fairly simple. And yeah, obviously follow Wintermute in general. If you want to touch on anything OTC wise, my DMs are open. I do reply as well. So
that's nice.
Yeah, I'm not. Don't have 800,000 followers like you, so
I do reply on my DMs too. But if you're a project looking for a market maker, if you're a big trader that wants to get in or out of positions, then it's the best to go to you.
Yeah, exactly. And then if not, we can point you in the right direction. But yeah, I mean, we're all looped in, and more than happy to talk to anyone really who's interested in any of the above. So yeah.
All right. Well, thank you for spending the time here in London.
Thanks for having me.
Good luck on the talk. I think you still have one.
Already been.
Oh, so, already been. So, yeah. All right. Well, thanks again.
Thank you.
And good luck on the journey. And thanks for explaining everything surrounding the crash. And good luck with hopefully a more calmer market.
Let's see.
Thank you.
Cheers.